Okay, so let's go ahead and get started. I want y'all to understand that this project is something I've been working on since the year 2000. It's been a unbelievably complicated project. When I did my book, Mastering NEoWave, I'd worked on wave theory for about 5 years. And, I thought that was a complicated project and took a lot of my time, and especially chapter 3 of my book, if any of y'all have read that. That was took me a year just to do that chapter. But river theory, even though I thought it would be a lot easier to do, has turned out to be massively more complicated than predicting markets with wave theory. So it's actually taken me 23 years to get to this point to where I feel like it's basically complete and that I can start moving on to other things. So anyway, the whole goal of river theory was to make trading easier. It was around the year 2000 when I first realized that the stock market was beginning a multi-decade correction, that I realized I had to do something about that, because in wave theory, you can't really predict corrective environments very well. So give me 1 second. I got to check. Magellan has apparently sent me a message. I got to see what he's saying just to make sure I'm not making any mistakes here for today. Okay, he just said sorry, he forgot to change the time. Okay, so I knew in the year 2000 that I would have to start working on a different approach, because wave theory is great at predicting trends, but not so great at predicting corrective environments, even though I've improved that ability quite a bit over the last 40 years. But I knew that this was going to be a problem. So the minute the bear market started in the year 2000, it was going to be an issue for about 20 to 30 years. So I'll get to that a little bit more on the next page. But first of all, let me tell you what today's goals are. Is to show you the concepts I've been working on for the last 23 years that helps to create an objective, logical, unemotional way of trading that I really don't think exists anywhere else in the world. Today's presentation is an overview of river theory and how it's able to do this. I won't be going into any extreme detail like what I do for the private classes. So if you're interested in those, you can write to Magellan at neowave.com and ask about that. Also, there's been an incredible amount of plagiarism and you could say theft of my ideas and concepts that is going all around the world. This has been going on for a really long time. I think river theory will be even worse than what happened for wave theory, because wave theory is a lot more complicated to understand. But river theory is easier to understand and implement, but it was very difficult to get it to the point that it is, to design it, logically organize it, and all that kind of stuff. So I just wanted to be clear that this is the exclusive right of NEoWave Incorporated. I don't authorize anybody else in the world to present this or teach this material. So today I'm going to show you the software that's been under development for about 23 years by me and Stefan, my TradeStation programmer. And the goal was always in my mind, always had this goal of organizing, objectifying, perfecting anything that I'm working on regarding markets. So the whole goal of this software is to make trading an objective, rational, logical kind of process, and that it helps to eliminate all the problems of typical trading and investing. So let's go on to the next page. So as I mentioned earlier, no, actually I'm jumping the gun here. So for my 40 years of experience in the market, I've learned that forecasting is the primary problem, the primary reason that most people don't make money trading. And this is because it involves your ego and it requires confidence. And anytime you make a forecast, if it doesn't work out, it's going to help to destroy that confidence, which makes you much more nervous and uncertain as a trader. And if you make predictions to family, the public, especially like I've done for a long time, that can cause damage to your ego if you're wrong. And most people will work on protecting their ego more than they'll protect their own capital, because they're more worried about their reputation than they are their own money. So both of those circumstances create a lot of emotionalism whenever you're forecasting and broadcasting those forecasts. And emotional reactions to markets and price action and news is always a really detrimental thing to a trading account normally. When you're trading without a plan to manage profits and losses in a very objective kind of way, that also can cause a lot of emotion and fear and greed. And I'm sure most of you have experienced this roller coaster ride of emotions that's caused from the forecasting process. So when you add to that no specific plan for how to take profits or exit and what the percentages are going to be and what the circumstances will be to create those conditions, then it makes trading a really emotional process. So the bottom line is that forecasting and trading without any kind of plan can virtually guarantee emotionalism, irrational reactions, and bad reactions to price and news. So it nearly assures failure overall. So the goal is to try to eliminate those things, which has been the process I've been working on for 23 years now. So in my early days, before I understood any of this stuff around the year 2000, I assumed that forecasting accuracy or precision was the key to success in trading and investing. Most people believe this. That's just the way 95% of the population starts their career in investing, with the assumption you have to be able to predict accurately to make money trading. I spent years and years working on perfecting wave theory with the idea that perfect timing, perfect forecasting was the way to do well. During my first 2 decades, I was using this approach, and sometimes I had great forecasts, great trades, and then other times it was not so good. So it was a roller coaster ride, as I mentioned to you earlier, both from a forecasting and an emotional perspective. And it was this, not the roller coaster part of the forecasting wasn't the main problem for me. It was the roller coaster ride of the account going up and down all the time because of the forecast being right and then being wrong and then doing stupid things, and you're getting all emotional about what's happening. And the worst thing that happens is generally you'll have a forecast and your forecast is bullish, and you're going to stay in a position even though it keeps losing money over and over and gets worse and worse, and you keep saying, well, my forecast is bullish, so I'm going to stay in. And that creates disaster for trading accounts. So you always have to have a point where you give up, and you need to have a target that's logically determined so that you're not getting involved in the emotionalism of trading. So in the year 2000, wave theory, or NEoWave at least, warned me that we were beginning a 20 to 30 year correction, which is still ongoing, by the way, despite all-time new highs. And I knew that wave theory doesn't allow me to predict corrective environments nearly as well as trending environments. So I had to figure out a new way to deal with markets, and that's when this process began. I had no idea how long it was going to take, but that's when it started. And over the next 3 or 4 or 5 years, I'm not sure exactly when the event occurred, but I started to realize that the progression of stock prices in a market is very similar to the way water progresses in a river. And so the next page that I'm going to show you is the result of 2 decades of work, thinking, trading, teaching. This just has gone on practically day and night for 23 years, but this was probably completed about 3 years ago. So if you look at markets in terms of a river environment, you have a south bank, a north bank, you have your turbulent zone, which occurs near the perimeter of the river. So the market sort of drifts and is choppy in this area. And that would apply to the top portion if you're beginning a downtrend, the bottom if you're beginning an uptrend. Then you eventually reach a point where the market starts to break out and starts to trend more. And if it's lucky enough, then the stock will begin to accelerate way beyond the speed of the average stock. And those are the ones that are the most potentially profitable over the long term. And you're trying to find these that are moving the quickest in relation to a universal standard. So you have monthly price action, which is mostly fundamentally derived. You're dealing with, all the fundamentals of a stock and sales and profits and volume flow and things like that, institutional demand. When you move to the weekly time frame, then you start dealing more with technicals, mathematical moving averages, trend following kind of approaches. And then when you move to the daily time frame, this is the most psychological environment, the most emotional, because people are dealing with generally smaller amounts of money. Smaller amounts of money automatically make you more nervous because you can win or lose, 25, 50% of your account in a day or two, depending on what the market's doing. So the faster a market moves, the more the public is involved, the more emotional things get. The slower it moves, the less interested they are, the more it's institutional buying and selling that's taking place. So let's move on to the next page. So I'm going to break each one of these up into the different river zones. Nikola Tesla, if y'all don't know, loved the number 3. And as I've studied markets over the years, I'm realizing, markets are also very connected to the number 3. So everything seems to be divided into 3 parts, 3 types, 3 categories, 3 behaviors, and so forth. So that all falls into what's on this page here. You have 3 different zones, 3 different types of behavior, 3 different speeds, and so forth. So it's all very interesting the way it breaks down like that. Okay, so when it comes to river zones, the bottom, if we're dealing with an uptrend, the bottom zone would be the turbulent or drifting zone. So it's either going nowhere, which is what I call a lake environment, or it's starting to drift, which is where the river concept starts to take place. And that would be in the bottom 25% of the river. Then move to zone 2, that's when the market starts to break out or trend. And that's when mathematical moving averages, trend following things start to work. And that's in the 25 to 45% of the range. And then you move to zone 3, which is the acceleration phase. And you could say it's a hyper oscillating phase where it might be oscillating but at a very fast rate in a particular direction. And that occurs in the 45 to 55% range of the river. Then you have the different forces that are impacting each one of those zones. Like I mentioned earlier, you have the fundamental zone, which is mostly volume flow. When I say that, I'm talking about large scale buying by institutions, which occurs when the public is getting out and the big traders are getting in, or the public is getting in and the big traders are getting out. Realize that big traders can only get in when the majority of the public is getting out. If you have $1 billion, you need 1 million people with $1,000 or 1,000 people with $1 million to get out so you can get in. So the fundamental forces that occur at market extremes or the top or bottom of a river is always the public is scared and they're getting out in mass, or they're excited and they're getting in mass, while the professionals are doing the opposite, because that's the only time they can get in or out. And this will also be instigated or propelled by sales and profits. So these large scale funds and traders are looking for profitable companies, good sales, good management, all these things that would be under the fundamental category. Once they've gotten their positions, then the market starts to transition into the trendier phase, where some of the more professional and regular real-time traders start to get involved. They're looking at moving averages and channels and things like that, which will start to have an impact and be possible to draw and to calculate once the market has moved away from the top to the bottom. You can't have channels until you start bouncing off the lows or off of highs, and moving averages won't kick in until you've moved comfortably off of a low or off of a high. So that's when the technical part starts to kick in, and then the public starts to get in, the smaller traders, when the news is really good or the news is really bad. The markets are moving fast. They see people making a lot of money really quick. They get emotional, fear and greed take over, and the public just starts to dive in, which then allows the bigger traders to start getting out. Okay, and then we have the what I call the elements. These are the 3 elements of market control. There's only 3 kinds of trading that you can ever do in a market. It doesn't matter what system you use, how you approach markets, what formulas, it doesn't matter. There's only 3 things you can do: buy near the bottom, buy near the middle, or buy near the top of a range, whatever that range is, daily, weekly, or monthly. And that means you're either trying to pick a bottom when the market's going down, or you're trying to buy a breakout when the market's making new highs, or you're trying to get in on a retracement after you've seen the low and the high. So those are the only three ways you can trade. And in river theory, they're color coded, and I call them bargain hunters, which I color coded with blue. Trend followers are color coded in purple, and top and bottom pickers are color coded in tan. Each one of these has a different characteristic to them, which allows you to design your entry strategies and channeling and entries and exits differently depending on who's in charge of the trend. So if bargain hunters are in charge of the trend, the market will be very boring and sort of choppy, which means it's typically going to occur near the bottom of a river, and it takes a lot of time, sort of an accumulation kind of process. Trend followers are those who are using moving averages and buying into new highs or selling into new lows. And then the top and bottom pickers are generally using things like wave theory, overbought, oversold indicators, or things like that. So each one of these is going to be separated in river theory, and it allows you to know who's in charge of a particular time frame and what kind of trading they're going to do, how they're going to enter, how they're going to exit, and what kind of channeling they're going to use. So here's an actual picture from TradeStation, which was taken yesterday, I think, showing the three different types that just happen to exist. I picked this specifically because each time frame was being controlled by a different group of traders. So here you can see it's sort of a brownish color, but it's supposed to be tan. This is the time controlled or the top and bottom picking kind of environment. This is an environment where the market will rally very quickly and reach tops or bottoms and go through panic kind of events. This little yellow bar is a panic rally in the direction of the trend. When you're in a bargain hunting environment, or what I call a bias environment, it tends to go sideways and back and forth a lot, so it doesn't trend that well, and then it has quick advances or declines after it consolidates for a while. And then the trend following environment, which I call a price environment, tends to be very sine wavy and just zigzags and snakes its way up and down over a period of time. So you have very oscillating trending behavior, mostly sideways behavior with occasionally erratic ups or downs, and then very powerful uptrends that are followed by very violent, powerful reactions. And I mentioned earlier these other things, the turbulence zone, the breakout, the trending acceleration, and the fundamentals. So this chart shows all of those things all at the same time. So you have the psychological environment, which is determined by river theory, telling you objectively when to get in, when to get out based on who's in charge and the kind of trading that they do. You can see this little green bar right here. That's indicating in a trend following environment, this would be a time to go long on a daily time frame. And that's why it's green. You don't see that on any of the other charts. This next section here has to do with the fundamentals and technicals sort of merged together. Fundamentally, this is, and technically, this is showing accumulation or distribution in a market. When it's green, it's indicating the market's under accumulation and moving, has upward momentum on a monthly basis. This indicates the market has broken out to new high ground and has maintained that new high ground. And this shows the oscillation trend-wise. So it's using mathematical trend analysis to show the market's in an uptrend on a daily basis. So this is mostly price-based with some demand volume flow incorporated into this chart here. And then the color at the very bottom shows the speed of the market. So you have these different zones in a market which are based on speed. So the turbulent zone will be the slowest moving zone, could be between about 0 and 30% overperformance compared to a universal standard. And then the trending area generally runs between 30 and 80% of the universal standard. And zone 3 is when you're accelerating, it's moving more than 80% faster than your average stock. So that's what this indicates down here. That means it's accelerating on all time frames. That means trading is viable on all time frames. So you can use this information down here to decide which time frames to trade objectively. You know, most people think, well, I'm a day trader, or I'm a long-term trader, and whatever. But river theory allows you to objectively pick the time frame that's best to trade. This is indicating all three are tradable currently. Most of the time it'll be gray for daily and maybe weekly, sometimes for monthly, but it picks by its coloration which time frames are safe to trade based on how fast the market's moving. Obviously, when the market's moving really quickly, you can get in with smaller stops and make more money quicker. If it's moving sort of moderately, then weekly trading would be better. And if it's moving really slow, then you have to have really big stops and be very patient. So the speed of the market is a crucial part in deciding which time frame to trade. So river theory at the bottom helps you decide which time frame is viable for trading. And the next mostly technical row reinforces the direction. So here's a market that's moving up quickly in relation to a universal standard. And then it's saying not only is it moving up, but there is demand and momentum, which makes this time frame safe to trade. Over here, we have the proper speed to make this time frame safe to trade. We have the price action breaking to new high ground, making it safe to trade. And we have NRT, which are Neely River theory, which gives us the controlling element, what kind of control exists, what kind of channeling will exist for this particular pattern, and what we're waiting for entry. Right now, there is no entry indicated because we would need a pretty significant sell-off to allow for that, but it's not currently present. This is the only time frame where we have the speed is appropriate, the trend is appropriate, you know, the market's making new highs, and it's under the control of a group that is currently giving a buy signal. So this would be the only time frame on this particular chart where a buy could be initiated. And river theory knows all three types of traders, as I mentioned to you earlier. There's the bargain hunters, trend followers, and top and bottom pickers. Each one of these uses a different kind of stop strategy. So based on the point where all of these three traders will no longer be in charge of this uptrend is where this stop exists. Same thing for the weekly, you can see it here, and the same thing for the monthly. So when this level is broken, that means no matter who was in charge of this uptrend, all three of them have now lost control, and now the sellers are in charge, and it will produce a stop above the market when that happens. So this is the maximum objective stop based on all three types of trading, based on how each of them places stops, based on how each of them places channeling. So we know the maximum objective ideal stop that should maintain itself while this trend is in effect. Initially, the stop would have been right here, then it moved to here, then it moved to there, then it moved to here. And right now, based on the lowest stop of all three of those that could potentially be in charge, which is bargain hunting, trend following, or top and bottom pickers, this is the maximum allowed stop currently, no matter who's in charge. And even if that control changes, so you know exactly where to put your stop objectively, no emotions, no forecasting. Let's move on to the next chart. So Neely River theory allows you to objectify all aspects of trading, which allows you to remove the dangerous emotion that makes people do lots of stupid stuff. So you don't need to predict the direction of the market. That is determined by volume flow and momentum, which is on the monthly chart. You don't need to predict the trading time frame. That's determined, lost my track here. That's determined by how fast the market is moving in relation to a universal standard. So you know if it's moving slow, medium, or fast, and that dictates which time frame you want to focus on. And you don't need to predict when to enter or when to exit, because that's determined by the competition between the three elements, the top and bottom pickers, the price, the trend followers, and the bargain hunters. So by knowing who's in charge, sorry, I'm trying to pick these charts properly. When you know who's in charge, then you know how to enter, what kind of channeling will be used, which means you can objectively determine right here that this is an entry point without emotion, without forecasting. You don't necessarily know what's going to happen. You don't know where the market's going to go, but you know exactly where to put your stop. And then I'll show you all after a while how we can use larger charts to decide where to exit. So it helps to eliminate all these uncertainties, which helps to eliminate the emotionalism of trading. We've also designed a scanner that takes all this information about what constitutes a good, safe stock to trade based on this river concept about where you are, whether it's moving quickly, whether there's accumulation, whether there's breakout, whether there's acceleration. All these things are taken into account with our scanner to help you unemotionally find stocks that are exhibiting strong behavior or river conditions. So our scanner will seek out, and I'll show this to you in a minute, will seek out stocks under accumulation with positive momentum. Among those that are in this first group, it'll find those that are breaking out to new high ground. So you're no longer in the turbulent drifting part of the river, but you're in the trendier part of the river. Then of that list, it finds those that are moving much faster than your average stock. So it puts them into the middle of the river. And then you're dealing with stocks that are going to go from point A to point B very quickly. You don't have to get in and wait 1 or 2 years for something to happen. You'll generally make money much faster than normal. And I'll show you this in real time on a lot of charts and stuff that we currently have. So this scanner, which we worked on for probably a decade now, this is an example of the most recent scan done, I think, on Friday. Maybe it was done yesterday. So shows a list of stocks that are moving very quickly. This is what's called river speed. So the river speed is 165% greater than average, and it goes down the list there. It shows the accumulation process and how long it's been going on, shows the monthly trend, how long it's been trending, shows signals on the weekly chart and the daily chart. These are NRT signals, which are the emotional signals, psychological elements. And then it shows the, on this particular time frame, the technical indications that the market is bottoming on a weekly basis based on technical trend following. And here's a technical daily trend following indicator. So we can go through this list and actually look at stocks that already meet all these criteria that puts these particular stocks in the middle of their river. So we don't have to go through looking at all these stocks and keeping track of all these things. It finds them for us. This is based on a scan of all the stocks in the US. And then from that list, we can begin testing them against the river concept and then look for possible entries. So once you've gotten this list of stocks, you can objectively review them for potential and whether you should be entering. So we're looking to test to see if there's upside potential. If you're looking at a stock and it's near the top of its river channel, that means it's already progressed about as much as it's going to progress, and you don't want to buy that stock. You want a stock that's near the bottom or maybe near the middle of its monthly channel, so you know there's plenty of potential, another 50% or more potential for it to continue to rally. Then you want to check for the best time frames by looking at the bottom of the chart, as I mentioned to you earlier. You can decide which time frame is best to trade, starting always with the monthly and working your way to weekly and daily. And then based on the conflict that exists between the 3 different types of traders, the top and bottom pickers, bargain hunters, and trend followers, they're always fighting each other for control. The market's moving very slow or not moving faster than the standard, then you're basically in a lake environment. Nobody's going to make any money. It's not going to really go anywhere, and it's a waste of time. The faster a market moves, and the more money that flows into a stock, the more predictable its behavior becomes, the more trendy its behavior becomes, and the safer it gets to trade that particular stock. So the conflict that exists between the 3 different elements, there's only one that can actually win the competition. So if you're in an uptrend, 2 of the 3 groups are going to be doing the wrong thing. They're going to be placing stops at the wrong place, exiting, entering at the wrong place, and they're going to be repetitively stopped out, while the one group that's in charge, that's using the right stops and the right channeling, will continue to persevere. And you can see that on the chart that I showed earlier. Like this price trend, or the trending environment, has been in effect, in this case, for over a month. And this chart, it's been, the bias environment has been in charge for about 3 or 4 months. And this chart on a monthly basis, this is time, or the top and bottom picking environment has been in charge for about a year. So each one of them tends to persist for a long time while the others are doing the wrong thing during that advance or decline. They're repetitively getting stopped out and having to re-enter at worse prices. So once you have your scan, you can go through and test them, which I'll show you in a minute how to do this. And you're going to find the best time frame to trade, the ones with potential, and the ones that have conflict that exist to allow you to actually enter. So here's the same list that I showed you earlier, and I picked this second stock here in the list. I don't like, I think this one doesn't actually have anything important going on, so I skipped it. But this one shows that it's not only moving quickly, but that there's a potential signal on a daily time frame. But when I look at this monthly chart, I can see based on the core channel and the projected channel that we've already covered about 80% of the entire potential likely distance that this stock is going to cover. So even though there's evidence of accumulation and momentum and speed and breakout, the psychological part, which is the most important part in determining entry, is not giving us any entry, and it's not telling us there's a lot of potential. So I would actually skip this stock and move on to something else. Let me go, here's another example. This is right here. This Immunovon is what it looks like. So this particular stock was also on the list, and I took a look at it. This is a bias environment, which is the bargain hunting environment. They tend to be very quickly violent and then go into really slow dead periods. So I call it B for boring, for bias, for bargain hunting. It's and B for blue, because I color code and coordinate everything in sort of a way to make it understandable. So here's the violent part, and here's all the dead, slow, boring activity. And if you look through the list here, this line is at exactly the same point on all three charts. So here you can see we had accumulation and momentum, we had speed, the monthly had a lot of potential. Here's the bottom of the channel, here's the middle, so we have a lot of room to advance on this time frame. On the weekly chart, we've already doubled our original channel and reached our projection. You can see the minute after it hit it, it went through a really violent and major sell-off. But the market is advancing quick enough to trade daily charts. It's trending on all three time frames, and the psychology is positive on all three time frames. So right in this area, you see this little red thing here, following the rules of Neely River, this would have been an entry, and this would have been an entry right near this bottom area when we had conflict between time and price, which is trend top and bottom pickers and trend followers. These were negative right in this area. So bias, you can see the blue bias dot here, the bargain hunting line here. That indicates bias is in charge. The market came down and produced conflict between the one in control and the ones that are not in control, the ones that are using the wrong strategy and the one that's using the right strategy. They were stopped out, which is why these are red here, and the market was sort of zigzagging its way down. That would have been a buy point. This would have been a buy point right near the bottom of this phase, and of course the market has taken off. I didn't take this trade, and currently as it stands right now, there is no buy signal. Even though the market's in an uptrend and there's a lot of potential, you need to see a green bar. There would have been a green bar all through this period, but it currently does not exist. Let me move on to another one. This will be, there's not a lot of stocks we can talk about right now that are good buys because the market's been advancing so far and so fast that virtually everything is either overbought or nowhere near a buy signal. So I'm going to have to talk about slightly historical stuff, and then I'll go into current positions we have that are in profit and unfolding, and we can discuss where we would exit. Okay, so here's a trade we took a while back. This was back in October. It's an oil-related company. I give the buy signal based on river conditions. And here is the actual chart. This is where we got in. This is right as psychology, which is the top row, trend analysis, and breakout and momentum are all in sync, and acceleration is all in sync. We actually got in the day after that started. You can see like a little green dot right there in TradeStation. That's where we bought, and then we exited part of the position when it reached daily resistance, which is an objectively defined parameter, not something I would predict. And then when we reached daily, the projected daily target, we exited another part of that position, actually the rest of it. and then it went into a consolidation so far. So here was an example of an entry, objectively defined, unemotionally decided, targets were unemotionally decided, and we're now fully out of this position. We move on to the last part. When it comes to removing emotion, having a logical process for placing targets and stops is super important, because 9 times out of 10, if you're using any kind of forecasting approach to a market, you're going to always get out too soon when you're making money and get out too late when you're losing money. That's because when you're losing money, your ego gets involved, confidence is tested, your forecasting approach is tested, you might be talking to friends, and your reputation is tested. So you don't want to lose money, so you're more likely to hope and wait for things to turn around and get better. Most of the time they don't. And when it comes to targets, most people get so excited they're making money, they get so fearful they're going to have to give it back because of bad experiences in the past of losing too much money, that they want to take their profits too soon. So what you need is an objective process that avoids this emotional self-defeative kind of process. So with river theory, you don't have to predict your targets. The targets are automatically created by the channels that are defined by who's in charge of the trend. There's 3 different types of channels, just like there's 3 different types of controls. So you have horizontal channels for one environment, diagonal channels for another environment, and expanding and contracting in channels for the final environment. And depending on what kind of environment and control you're in will determine those channels and determine your targets. So you have an objective way of determining your targets. As I mentioned to you earlier, the stops are determined by the point where all 3 of the traders, no matter who's in charge, will all lose control of a time frame. So you have a very objective way of placing your stops, so where you're not going to get stopped out unless the trend on that time frame has come to an end. So let's take a look at, this is the current state of the customer account, showing all the 31 positions that we have. Only one of them is losing any decent amount of money. The other 4 here are losing small amounts. You've added all together, it's about $400. We're making over $5,000, so we're making about 1,200% more on our winners than we are losing on our losers. And when you're looking at this, this is our profit protection app. It helps to color those positions that need attention or potential exiting, and colors those in red that need attention or exiting for, at a loss. The rest of them, it won't really bother you much about, because once you're in a stock position, to objectively manage things, you always want to make sure you give it time to perform. So either you get in and it starts going against you, and then you take action to place stops to get out of the loss, or it goes in your favor and you place targets to get out of the profit. In between there, you don't want to do anything. You just have to give the market time to do things. So this will make that clear. It'll also point out potential problems with river environment and speed. So like these 2 are moving fairly slowly, so I'd want to take a look at this one to see if there's anything that justifies exiting part of the position. Same thing for our SPY position, but this was instigated by wave theory trade, not by Neely River theory. So it's a little bit different, but all the rest are in fairly good shape. Yes, last week we had about 94% in profit, but currently it's 84%. So what I can do here, so I want to show you in real time, based on the most recent action of each one of these, since we don't have a lot of new trades we can talk about taking because the markets rally too much. I'm just going to talk about ones we've already taken and what we're doing to, look to exit those. So let's start here from the bottom. Well, I can start at the top if you want. We have a relay. Let's see. That's the only one really losing any significant amount of money to instigate a stop placement. If it's losing more than about 7.5% is when I start putting stops. So here is a very interesting example of how accurate these Neely River stops are. This stop was placed in advance of this decline. I don't remember exactly where, but it was placed in advance, and it came within 3 ticks of this stop, and then it bounced all the way up to here, and currently it's trading right here. So that shows you that the controlling element, which in this case is the top and bottom picking crowd, which you can see the behavior characteristics are there. I mentioned to you that these are very trendy and violent kind of environments where it might trend very quickly up and then collapse very fast. So here's part of the fast advance and here's part of the fast decline. But during that fast hyperviolent decline, it stopped out the trend followers and the bargain hunters, which is this blue and purple arrows going down. But the top and bottom pickers were not stopped out. So stop was here, it wasn't hit, and the market is bounced. So that's the only trade we have that's currently losing any significant amount of money. These aren't even worth looking at because they're just not up or down enough. So the ones we want to focus on now would be the other side, the ones that are making a lot, and going over those charts to see how they look. Now, all of these are already listed here, so I'm just going to go through those one by one, but it's all these here that are making around 15% or more. So here is GBTC, which we've had for a while. You can see here where we got in right as the market was breaking out of what I call a lake environment before a really powerful new trend, and it started trending very nicely. We took off part of our position when we had a panic rally because the top and bottom pickers were in charge. Then this part is actually when it reached weekly resistance over here, which is the first level of resistance. And then our final exit is based on the weekly projected resistance, which is right up here. And if a number is not a round number like 3672, I just round it down to 36 because most people place orders at even numbers. They don't put them at fractions. So you're much more likely to get a good fill at 36 than at 3672. So I just place it at that level. So that's what we're currently doing with this particular position. You can see a volume flow and momentum is still positive on the monthly. Directional breakout is still positive on weekly, and trend following is still positive on the daily, and you can see accelerating on all time frames. So we're just going to hang on to that position until that target is reached. Here's another very interesting example. This chart is being drawn wrong by NRT. I don't know why it's doing it. I'm just going to turn that off. Our stop was one tick below this low, and this came within 1 or 2 ticks of our stop. We got in here and it sold off. We didn't get stopped out because in this particular environment, bargain hunting is supposed to be in charge, which indicated a stop here. Came within a few ticks of the stop, and then it took off and rallied almost 50%, 40, 50% in a very short period of time. So we're currently long this. We haven't exited any, but we have a target on the daily, which again is completely objectively determined. I'm not predicting any of this stuff. This is where it tells me we're going to hit resistance based on a bias environment being in charge and how the channeling works in that particular environment. So that's where our target is for half of our position, and that's it. And then I'll wait to see what happens after that. Here we got in a DUOL. Back here, market oscillated a little bit, and then it took off in sort of that violent manner that typically happens when you're in the middle of a river. And our first target was when we were getting close to this area here. So we took off part of our position there, and we're still long a partial position. You can see the monthly accumulation and momentum and weekly and daily are all still in good shape. There is no monthly NRT because there's not enough history on this stock to actually figure out what's going on. Moving on to DKNG, you can see where we got in over here. It went against us a little bit, and then it took off and had a violent rally with the trend when the top and bottom pickers are in charge. So that instigated a partial exit there, which also happened to coincide with a weekly resistance area. So we still have part of our position at this time, and our next target, I have a little alarm up here. If it gets into this area, then I'll enter a target. I may enter it before then, but we will look to exit the rest of our position up in this area. You're looking at CZ, or sorry, ZS. You can see where we got in here, and this is again using the concept of finding those stocks that are in the middle of the river, moving the quickest, have accumulation, have trend, all that stuff. So when we got in, this one was in good shape, and you can see it just almost immediately started trending very nicely. And we exited this. I think this was an accidental exit. I think I mistaken, if I remember correctly, I accidentally exited this at the wrong time. I was entering an order for another stock. So this one is not really correct. It should have been over here. I think it was an accident when I entered the wrong symbol. But this exit was definitely correct, where we reached the weekly resistance. So that would be the partial exit, and then the final exit would be up here if the weekly projection is reached. You can also see that the daily momentum is now slowing down, which is another reason to be out of our daily position. So I generally tend to have positions that are 3 time frames. If it's accelerating quite fast and everything is green across the bottom, I'll have a monthly, weekly, and daily, and I'll exit in stages. So I'll exit when the daily reaches its target, and I'm 2/3 long. When the weekly reaches its target, I'm 1/3 long, and then I'll wait for the monthly. So it allows me to have long-term trades, intermediate, and short-term trades all in the same stock, and all completely objective with objective stops and everything. Here's when we entered just recently, just I think last week. And you can see we got in comfortably after the low, and then the market took off like a bat out of hell. It went up, what, 30, 40% in just a few days. And because of that violent behavior, which typically happens in top and bottom picking environments, where it gets the public all excited, and that's right when you want to start getting out. So we took off part of our position here, and we have a target for the other part up here when the weekly resistance zone is reached. This one we got in, went sideways for a while, but we got in over here, and then it started to accelerate. And as it exceeded the doubling of the daily channel and reached the weekly resistance pretty much around the same time, we took off part of our position there. And I'll probably look to exit the rest of it up in this area. I don't have a stop currently in place. You can also see the daily is starting to slow down, which means we should no longer be long in the daily time frame. This was another accidental exit. You can see right before this we had 200 shares and I exited in 2. It should have been a different market, so that was another accident. But you know, we made money on it. But so we got in here. The market has moved up quite a bit, but my target for this is right below at the even number 20 instead of 20 and something, 20.65. I have it at an even number, assuming that'll be about when it reaches this resistance. So I have a target to exit about half the position there, and I'll hold the rest. Because if you look at the monthly chart, you can't even see, you can see the top of the channel. It's up in the $60 range. We're only around $20 right now. So this allows tremendous upside potential. Again, you can see the monthly stop, which is really far below the market. The weekly stop is not that far, about $5. I don't have a stop though, because we're already making money. I only focus on one side or the other to avoid too many having to cancel orders and replace them and all those kinds of things. So if I'm making money, I focus on the targets. If I'm losing money, I focus on the stops. There's another position we got in. You can see it was right before the acceleration. It was dead for quite a while, and then using the rules and the scanner and everything. See, this is right when the market started to trend on all time frames. NRT started to turn positive. The trend traders were taking over. The market went straight up, went through the 100% range, the 200% range, and I started exiting positions here. And because we were reaching close to the weekly resistance, but I have another order to get rid of the rest, it looks like if we get to 700. Now this customer count is around a little bit more than $50,000, so we can't always take full positions. So sometimes we just take, you know, small positions if it's very expensive. Like this is a $700 stock, so can't take a lot of shares when it's that expensive. Try to keep allocation to about $3,000 per stock and risk about $250 per time frame. Okay, so here's another one we got in, and within a short period of time it started trending. It reached not the daily, but it reached the weekly resistance, so I exited part of the position there. The other part is based on when it hits the daily. So this is not a daily target. This is the daily target here. This just shows the same stop on the weekly chart. So here we've reached weekly resistance, and now I'm looking to exit the rest or some part of it if we get up to daily resistance, and I'll keep the rest for a monthly long-term trend. Okay, this one we got in where this orange line is, so here's the green entry point. Moved against us a little bit, but it eventually started to trend. And now we have a target to exit at the daily resistance point. We have another target at the monthly resistance point, and final target at the daily maximum potential point. So these are the 3 that are produced by monthly and daily levels. None of them have been reached yet, but that's what I'm looking to do and see if it happens. Now the SPY, I'm in it, but it's not really based on NRT, even though we got in and it started trending very nicely. It's mostly based on wave theory, but wave theory doesn't give good targeting. So I'm using river theory as a way to target where to exit. We've taken off some of the position because wave theory was warning me we could be in problem situation short term. The longer term targets will probably be based on the weekly chart here and maybe the monthly chart over here, which projects above 560. So here's an example. By the way, you can see it's not accelerating. That's because it's an index. You're never going to have the NASDAQ, or very rarely have the NASDAQ or the Dow or the S&P accelerating, because they're averages of lots of stocks. So they can't ever move really fast or really slow because they're pretty much, an average. So any index you put in the system will almost always just be gray at the bottom. I mean, it's not moving that quick. So you need to be more careful about how much you invest, and you need to reduce your exposure because it's less predictable. Okay, let me go to presentation again. So what I've been showing you is a way using river theory to design a process of picking stocks objectively, deciding when to enter stocks objectively based on who's in control of the trend, projecting or reacting to targets and stops that are predefined by a river theory. So you don't have to predict any of these things, and it makes trading a much more objective, unemotional, and profitable process, as you can see from the customer account. So I could open it up for a little bit of questions. See what time it is. Yeah, we're pretty much running out of time. It was almost exactly an hour. I can probably take some questions and answers, questions in the question and answer thing. There's a way that you can do that in your GoToWebinar control panel. There's something that says Q&A, or what does it say? It's something like that. I'm trying to remember the name of it is. It just says questions. Okay, so I have a question here. It says, let's see, will you get through? Yeah, the recording of the seminar is done automatically by GoToWebinar, so you get a copy of this. Again, these should not be used for, personal presentations or anything. This is the property of NEoWave. This question says, once enrolled in NRT course, can I get demo credentials of TradeStation and the software? I'm from a country unable to register with TradeStation. Yeah, if you're not, if certain countries don't allow TradeStation and don't allow you to trade US markets. Countries like India, you can, but you have to use third-party data if you want to trade stocks in your own country. So, that can be done. It works easiest and best in the United States. And then, well, Rahul says, I thought the webinar was going to start at 10 a.m. Yes, it was supposed to. Unfortunately, Magellan forgot to change the time. And so I started at 9:30 because most people were in the class then. So we probably missed a lot of people because I only show about 100 people in the class right now because the timing got messed up. And it was supposed to start at 10 Central, and it looks like it started at, well, at least GoToWebinar said 9 a.m. Central. So it probably confused a lot of people, but at least anyone who signed up will get a copy of this webinar sent to them in their email. And if for some reason you don't get it in the next day or so, then you can write to Magellan and ask for it. Anybody else have any questions about, okay, some more have come in. How can I use it in Indian stocks? Okay, you can use TradeStation with Indian stocks as long as you import the data from a third party, like you have a broker that has Indian stock market data or a website, and you can import that third party data into TradeStation and it'll do the analysis for you. My programmer and technical support guy in Australia, that's Terrence, he can help you with that kind of thing. Okay, let's see, does NRT work on TradingView with TradeStation? No, you can't use NRT in TradingView or any other environment except TradeStation, but you could import data probably from TradingView into TradeStation to get it to work. Let's see, I'm gonna have to zoom in a little bit so I can see this text. Some of it's pretty small. 1 second. So my chart's gonna zoom in a teeny bit, just make it easy for me to read these questions. So would it be possible to use hourly timeframes for better entry? I don't recommend it because the smaller the time frame, the more erratic and emotional markets get and the more chaotic it gets. So I recommend sticking to daily and higher. You can still get incredibly good entries, and most money is made from trading longer periods of time. You're going to find it extremely difficult to make good money trading very short periods of time. People always use the false idea that, if you can catch more moves on an hourly chart, you can make, 5 times as much as on a daily chart. Problem is you have to be 5 times more accurate to do that. So I don't recommend it, and it tends to make people more and more emotional. Why the monthly, weekly, and daily? Why not break 3-day and 8-hour? Okay, monthly and weekly and daily are just naturally built into most systems. TradeStation makes it easy. Most trading platforms are the same. And I've learned over the decades that you want to have about a 5x relationship between all the time frames you're trading. If they're closer than 5x, they start to be too similar to each other. You want them to be comfortably different, but not super different. So 5x is generally the best multiple. So a day is 1/5 of a week is almost 1/5 of a month, and a month is, because a month isn't actually 5 weeks, is about 1/5 of 6 months. So that's how I design all the strategies. In case of country limitations, just meet your TradeStation software access for, I don't quite understand that question. Can this be used for day trading? Yeah, it can be, but I don't recommend it. How does it work in futures? It can work in futures markets. I don't really recommend futures because futures markets are inherently more dangerous. They can gap up and down around stops. They're leveraged. I just don't recommend trading markets where you can lose more money than you actually have. And that is possible with futures markets. I don't have TradeStation account, and you're unable, if you can't get TradeStation, then you really won't be able to use the software and use the concepts that I'm talking about, because it's too complicated and tedious to do by hand. Can you combine Elliott Wave with NEELY River? You can. I think the best way to use that is just to realize when you have like a major turn, like recently the S&P structure was indicating a major bottom was forming in the S&P multiple times over the last year. So for that reason, I'm only interested in going long and looking for long trades and have comfortable, confidence that the trend is going to be up and that it's going to be safe. And then I look for stocks that agree with that. So you can, but I wouldn't use it day to day, but more big picture. Okay. Does NRT work for weekly expiring options? Well, I mean, you can use options, but having them expire every week makes it very difficult. I wouldn't recommend that if the time frames are just too small, unless you're going to trade really deep in the money options, like 25 and 50% in the money options, then it'll trade more like a stock and you can use it. You can do NRT manually, but it's very tedious and I don't recommend it. Okay, normal channels that people draw are generally just looking at a chart and deciding mentally, this is a high, this is a high, this is a low, this is a low, and I'm going to draw a trend line across those. Is it purely subjective, emotional decision, preferential decision? Every time frame might have a different kind of channel. Where NRT channels are drawn very specifically with very rational, logical concepts behind them, so that they can be repetitively used and the behavior around them becomes reliable. Okay, I am quite skilled with Elliott Wave and also with NEoWave theory. Is there a way to combine it? Because I already mentioned that. Does NRT have limitations like NEoWave is not good to use? No, NEELY River is really a superset of wave theory, believe it or not, because wave theory is a predictive kind of technology. So it falls in the top and bottom picking category of the three. It doesn't deal well with sideways market action, which is mostly corrective action. It doesn't deal well with what to do in the middle of trends. So NRT is actually a superset of wave theory. What is your take on gold and commodity? And yeah, gold is currently, from a wave theory perspective, is the most difficult market to predict, but I can take a look at it from an NRT perspective really quick and see what it looks like. So let me pull it up here. I'm gonna have to shrink this chart. Give me 1 second. Okay, so the best way to track that from the stock market would just be GLD. So I'll use that. Okay, so what it's currently telling me is that gold has been, for the few years ago, was in a downtrend. has had some up and down periods. Recently is starting to show signs as of this is just a few days into this month, but this month starting to show signs of accumulation. Shows we're in a bias environment or a bargain hunting environment. There is potential because the upper channel is up in the 235 range or so. So there is room for up movement. The weekly charts indicate we're getting probably close to resistance. There is no signal to enter, and the daily is close to resistance. So this would tell me the only way I would consider getting in is if we go through a pretty significant sell-off to maybe below 180. That would potentially provide a potential opportunity to enter. I'm going to put in the continuous gold contract. I don't like putting in continuous contracts, but if I don't do this, the monthly chart probably won't draw. And we can't rely on the volume information as well, but this also indicates we're in an uptrend. We're closer to resistance on the monthly. We're in more of a trendy part on the weekly, and we're near resistance on the daily. Only the monthly time frame is giving a potential buy signal, and that's because bias is in charge as of about 3 years ago, and price and time, or the trend followers and top and bottom pickers, are currently doing the wrong thing. They went short or got stopped out of positions over here. So the ideal time to get in would have been over here, but it's still where these are contrary to the main trend. So you could consider a long-term purchase, but your stop would have to be really big. It'd have to be about 100 or more points below the market. So that's a pretty big stop. So I wouldn't recommend it. So if you're going to do anything, I would trade, the GLD. But this would be only a long-term trading environment at best. And you'll notice at the bottom that it's not accelerating. It's not moving very fast, making this a market that, you can trade it, but there's other things that are going to be much better. You want markets that are moving fast, not moving slow. If it's moving slow, well, then you're guaranteeing you're not going to make nearly as much as something that's moving much faster. So if we go into the scanner here and look for something moving really quick, like this rover company, you can see here's the initial monthly test where I'm waiting for it to draw. Looks like there may not be enough history to, oh, there it goes. So it's showing that the monthly trend is just beginning. There's good volume flow, momentum, breakout, acceleration. It's accelerating fast enough to indicate daily trading is possible, and it's just starting to make money. So all those are good signs for potential entry. When we get to the complete chart setup, you can see we've already reached a resistance on the daily. The weekly is way above, and there's no entry. We need a violent sell-off to allow for entry on a weekly time frame. We need a return back into this area to allow for a daily entry. So there's nothing to do on this one, but this is the process that you use to find things. You would do the scan, see which ones look good. It doesn't tell you which ones are going to be buyers or sellers right now, but which ones are moving quickly and have all the proper conditions and volume flow and breakout and acceleration. All that stuff is present, and then you wait to see, does it have the right psychological conditions for safe entry? This one might, if I remember correct. No, this has moved too much. Most of these are, the markets have just moved too much. So right now I'm mostly in an exiting environment, just looking to exit positions that we got in a while back and making money, which is all these, in the list. And then of course, I don't know what will happen with these others, but if they start to make more than 15%, I'll start putting in targets. And remember, those targets again are not predicted. They're visually observed. We just see where the channel is, and you place the target based on where the channel lies, because that channel will be the way this market behaves when a certain group is in charge. And you have different channels depending on which group is in charge. So in this environment, you have horizontal channels. Let me just go through a few here. This one, you have slightly contracting channels. Looking for a price environment. Here's a price environment where you have diagonal channels for a price environment with more sine wavy behavior. And of course, in the class, I teach you how to identify all these things and what they mean and how to use them and all that. But so that, let me see if there's any more questions, and I can call it a day here. Will it work with CFDs? I'm not sure what CFDs. Is that crypto? I'm not sure what that is. So you have to spell it out so I know what that is. Yes, TradeStation does support third-party data. There are no fake channel breakouts. It either breaks out or it doesn't. In the training class, we will be showing how to do it by hand. I mean, you will learn in the training class, the first month I explain everything manually. You actually go through classes and you do everything by hand. You do them on the chart. You learn where to put stops. You learn how to do channels. You learn, the controlling elements, and all that stuff is done by hand, specifically so you understand when you look at TradeStation what you're looking at. So it can be done by hand. If you're going to do that, I would keep it to no less than daily, and preferably weekly and monthly. Then it's not so tedious anymore. In the training class, we'd be showing how. Okay, I already answered that. Contract for difference. I don't understand what that means. It should work for Forex, but again, I don't recommend those kinds of markets. Forex, I don't think TradeStation even allows you to follow some Forex markets, but if you can plot it and there's good volume information, then you should be able to use NRT for that. You want me to recap the info? Okay, so as far as recapping the whole course, your beginning of the process is that, let me see where it starts, is that you want to understand that forecasting markets is a very big problem. It's the primary reason most people don't make money. It causes emotionalism, which causes stupid decisions, and causes you to get out too soon on profitable positions and get out too late in losing positions, because most people don't want their ego to be hurt and lose money. See, this is the structure of the river that took me about 20 years to figure out, and all the different elements and forces that are applied and how fast it's moving based on where it is in the river. These are the different zones that I call them based on where it is in the river and how quickly it's moving and the kind of behavior you get in each. Forces are fundamental, technical, and psychological, depending on where you're in the perimeter, the trendy part, or the fastest part of the river. The three different types of traders are listed here, which are color-coded in TradeStation. Because everything is objectified, you don't have to use opinions, forecasts, or anything like that to be able to trade markets successfully. And you'll find a dramatic reduction in your emotionalism, your comfort level. Now I can just look at the markets generally once in the morning and once in the afternoon, and I'm done. Used to have watch it every minute of the day, pretty much. That's a big waste of time, because markets, can't make you money unless you give them time to go somewhere, and that takes time. So anyway, we've also built into TradeStation a scanner that allows you to find stocks that meet the river criteria of speed, momentum, volume flow, which is demand, and psychology. Then you want to test those stocks that come up in the list to see if there's potential. If you're in a monthly chart where you determine potential and it's near the top of the channel, you don't want to get in. If it's near the bottom, then there's a lot of potential. So it becomes a highly viable stock to trade. Let's see, these are just covering old trades. So in the last step, which is the most important, is once you're in a position, is knowing how to manage the profits and losses and to do it objectively, not where you're predicting anything, so that you don't get emotional about what's happening and you can patiently wait. So when I look at these charts in TradeStation, because I have a visual idea of where it's going without having to predict it, it doesn't involve my emotions or my ego. I can just see where it is that I need to wait for it to get there. And if I want to, if it's making money enough, then I can put the target in advance. Just looking for one that has one. So here's a target in advance based on the weekly chart. And you don't have to get emotional about it. Based on probabilities, it's going to reach that target, and it's just a matter of waiting for it to happen. In the meantime, you have a stop, which won't lose you too much money if you're wrong, and will make you a nice profit if you're right. So it makes it easy to maintain open positions and have stops and targets, because it's all objectively defined and has nothing to do with your ability to predict anything. Okay, well, I think that pretty much wraps up the class and the summarization of everything. Let's see if any of the good questions came in. The NRT can show sell signals. I've just learned over the years that bear markets tend to be very fast and they can happen very erratically. So a lot of times it's just better just to be out and then wait for a chance to get back in. you know, they just don't last as long, and it's a lot more trouble to enter those positions. And the general trend of the stock market over, you know, 100 years, 200 years has always been up and sideways and up and sideways. So it's just not a generally good idea to short the market very much, and it makes things a lot more complicated and more dangerous, because if you short a stock, you're open to unlimited potential loss. You could, you know, if you learn the class and you used it mostly on weekly and monthly timeframes, then yes, you could trade with NRT concepts without having the software required. So that is possible, but I wouldn't do it on a daily, and for sure nothing below a daily time frame. Okay, that pretty much covers everything. So let's go ahead and call it a day. I appreciate it. If y'all have any questions for Magellan, you can email him at magellan@neowave.com, or just CS for customer service, cs@neowave.com, or you can call the number and ask if you have any interest in taking any of the classes. I appreciate it. I hope y'all enjoyed it, and y'all have a rest of your, have a good weekend. So I'll hope to hear from some of y'all sometime soon.